with us now. Alan, what do you think?
Well, I tend to disagree. If you just look at everything considering price, the prices have dropped dramatically. The Fed is winning this war. The dollar's way down. The VIX is down at its lows. Crude oil is at year lows. Interest rates are down 20% in the just last couple weeks, and we're at 3.5% in the 10-year note yield. So I see a lot of price positives, and it's not just us. China's 40% off its lows. Europe's 20% off its lows. So I think, this is kind of weathered the storm for right now. We need to see another push in the S&P, but we did get a big pop last week. Let's see if we get some follow through.
So when you look at the consumer and you hear the fact that, they're sputtering, do you agree with that?
Well, sputtering, could be the individual, but there are a lot of people making a lot more money than we've made in the last couple of years, and prices are coming down. So we've kind of weathered the storm for now, and with the dollar continuing to decline, that's very much a positive for all asset classes and for the market in general. The consumer, like I said, we've seen free money where rates were free for mortgages for years, and now we're just back to kind of a historical average. But we are, as consumers, making money on our money right now. If you want to park your money, you can get 4 or 5% pretty easily without much struggle.
When you say 4 or 5% without much struggle, investing in what?
Well, that's just basic treasuries. Like, if you look at the short term, you can get CDs, you can get treasuries now are paying money, whereas I can't remember the last time you could make money from a bank account.
But not stocks. But not stocks. You couldn't beat that with you couldn't beat that with stocks.
Well, I certainly think you can. I don't think markets are ever good or bad.
Okay.
I always look at the opportunity, and you can either be a victor or a victim. So whatever's taking it, you can take advantage of. When energy stocks were on the move, and I think they're set up again to base out and make a potential move to the upside. But you just want to trade whatever's the strongest, whatever is the best. Money, you can make money in down markets, you can make money in up markets. So I have to look at it, and that's why these markets are here, is to protect and profit. So you can do that. You don't have to be passive. You can take advantage of whatever the markets give you and put it in your pocket.
So if we have to return to a mean after the markets have been mean for a couple of years, what do we look forward to? The average returns that would be in the 8 to 10% for market investors over time? How do you see it?
Oh, yeah, that's very realistic. I mean, look at it. The Dow's only 30 stocks, but the Dow is less than 10% off its all-time top. The S&P is 15% off its lows and 15% off its highs. That's considering we've got a war going on in Europe and what's happened with prices. Prices have reflated, but, if you look at crude oil as our psychological barometer, we're at $70 a barrel. How is that not positive? Everybody yesterday was talking about how interest rates dropped too fast. You can't have it both ways. You can't have interest rates rising too fast and hurting the economy and then falling too fast and hurting the economy. So, you got to look at it in relative terms. Rates are still historically low, and stocks have gotten super cheap with our PE value below the 10-year average. So I think there's good risk reward, better risk reward in stocks, and I think some of these tech stocks that have bottomed out, Microsoft and Google and Amazon, they're showing that there is a turn even in that sector.
Got it. Alan, great catching up with you, my friend.
Thank you.
All right, Alan Nuckman. In the meantime,